Welcome to PM Express Business Edition. Inflation rate has been going up all over the world and Ghana has not been excused. But the impact or the reaction of regulators around the world will be to possibly hike policy rates to try and check the amount of currencies in circulation. And that will obviously impact the cost of credit. So what are the banks saying to this, and what are they going to do to ensure that cost of credit is not affected and credit delivery is not impacted badly? Well, I'll be engaging the Chief Executive of the Ghana Association of Bankers, Mr. JoyNews, to find out from him what is the position of banks right now in a year where some will say that it's still quite interesting when looking at COVID and the fact that some businesses are still yet to pick up fully. What has happened to those who even took loans from these commercial banks? Have they started paying? Are they almost through, or they are still struggling to pay? And how would that impact on the general credit delivery in this country? Mr. JoyNews is my guest on PM Express Business Edition. Thank you so much, sir, and welcome to the program, sir.
Thank you very much.
How are you doing? It's been quite a while. But,
it's been a while.
The industry has always been on heartbeat in terms of what is happening in the economy, right?
Yeah, of course. We are a reflection of the economy. So whatever happens in the general economy, of course, transmits through the banking system. So to that extent, we are very good watchers of the economy.
Well, some of us were quite worried about COVID and the impact on the industry, but so far, still seeing some of the financials. 2021 wasn't a bad year at all for your members.
It remains to be seen. Numbers have not been audited and released yet, so I normally, shy away from commenting on management accounts because the auditor's view is always sometimes
not picking out
a more
any
prudent view
specific bank, but
yeah.
From what I've seen so far, it looks like 2021 was a good year.
Yeah, moderately okay.
How did you guys do it? I mean,
the economy generally wasn't as bad as analysts projected. Growth numbers are not out yet, but if you check from quarter, the final numbers are not out yet. But quarter three, I guess,
shown quite
a strong growth. And when that happens, of course, it comes to the financial system. People in their trade volumes are also going up, and general economic activities, have picked up. And of course, banks are key actors in these economic undertakings, and to that extent, banks also tend to have some gains on the back of good economic prospects.
I mean, I've asked, I remember I asked the statistical service, the statistician, this question. I've asked some economists as well. Did COVID push all of us, and let me talk about the banks because they've always been doing well, to look at more innovative ways not to go down? And that push, that reminder, maybe urged you guys on for some of you to post those strong numbers? Because look at COVID, and there are some industries, some sectors that did so well that under normal circumstance, they wouldn't have done that well.
I'd like to look at it differently. We should thank God and also for the interventions of Bank of Ghana that COVID happened after the banking sector cleanup. And therefore, before the advent of COVID, banks were really showing very high prospects because we had the remaining banks being very strong, good capital levels, very solvent, liquid. So when COVID happened, the shock to the system was a bit moderated because the banks were on very strong footing. And coupled with the fact that banks did not also close the taps, we actively looked at businesses or sectors that had not been impacted significantly that could, carry the show on, carry on. On the other sectors that really suffered, and banks provided some kind of liquidity to the environment, even in times of serious uncertainty. So banks did not fold during the pendency or at the height of the pandemic, but we became active participants and also propelled the wheels of the economy during those uncertain times.
In terms of credit, total credit, not specifics, but just even a round figure, how much did the banks extend out last year, even in the midst of all these things?
Numbers are not out yet.
That's something, not specific numbers. We're looking at specific numbers.
The governor in the MPC release talked about a modest growth And I like to talk to numbers that have been sanctioned by the auditors. Modest growth in terms of uncertainty. I see very good prospects in terms of positives from that statement. In other industries or in other countries, banks' balance sheets have rather shrunk, or lending to active or productive sectors have significantly declined. So, for us to be talking about a moderated growth, I think it's a reflection of the times that we are in. Banks, coming from a clean-up environment, much as we are active and we want to help propel the economy forward, we are also very careful because we are coming from a very recent history of extreme non-performing loans. And you don't want to park assets on your balance sheet, take the benefit for 1 year, and another 2-3 years we'll be writing down those assets. So to that extent, I think banks are just being careful, and not that they are not lending at all.
But you talk about modest growth. I mean, the economy expanded by quite significant growth. Obviously, in terms of third quarter, in terms of for last year, there was some significant growth compared to the previous quarter. Obviously, that expansion would impact on the financial services sector.
Yeah, it would, and definitely the growth in assets, the numbers are not out yet, will definitely exceed the GDP growth, which means that there's actually a real growth, or we are going to witness a real growth. Let's wait, let the sanctioned numbers come out, and then we can really have a discussions around how the banking sector did in terms of growth in.
But overall, what I've seen so far, the numbers were good for me.
I think they are good. Again, let's wait until the final numbers are.
Let's look at, we're talking about growth. Obviously, economy cannot expand without those businesses expanding. You give out some credit in 2020, 2021. In terms of kickstarting the process to repay some of this credit, what has the situation been?
Nobody thought that at this time we would still be talking about COVID. In 2020, latter part of 2020, even middle of 2021, I'm sure you were all thinking about a clean 2022 where COVID would have been behind us. To the extent that it has prolonged, and we are still having, these restrictions in place, it means that there are sectors that are still going through some troubles. As I speak, I use myself as an example. My kids are studying from home, which means that their school still sees the COVID presently as a high risk, and therefore they've asked the kids to stay at home and school from home. There are other sectors. The tourism sector has not fully recovered. Aviation has not fully recovered, and these are businesses that have the banks behind. Banks have provided liquidity to these businesses to the extent that the recovery has slowed, and the cash flow projections have not been at the levels that we anticipated when assets were restructured. It means that even where banks are posting some good profit, you will see that the impairment numbers in 2021 were not that impressive. Yes, in quarter 3 it came down to around 16.4 thereabout, but we are talking about last year or 2020 when we were talking about 15 and 15.3 or something in that region. So any growth in impairment is a challenge to the industry, and it means that the risk to the banking sector in terms of asset quality is real, and to that extent,
do I get from you that means that the default rate is still very high? A lot of firms those who took funds from your members are struggling to pay.
What I would say is an NPL around 16.5% is high. It means for every 100 Ghana cedis that a bank gives out as loan, there is that possibility or probability that they will not be able to recover about 17 Ghana cedis of it, which is significant. When you give your deposit to the bank, you want your deposit plus whatever interest that would have accrued. So if banks are going to lend your deposit and have that likelihood of inability to recover about 16.5 Ghana cedis of 100 Ghana, it is significant. And that is why the impairment risk, and the governor said it, he said the risk to impairment is still high given the prolonged nature of the pandemic.
I asked this question because of the fact that in 2020 and in 2021, there was push both politicians, regulators, and even the public that, listen, the banks are not being proactive to aid recovery. And I know that these are not free cards. These are shareholders' funds. These are creditors' funds that you are on lending to these firms. And I want to look at a situation where, yes, you guys were very prudent in selecting right sectors. But are you now, some of the banks or some institutions having their regret that even though we did all the prudent work, these businesses or some of these businesses are not meeting those commitments in terms of the repayments?
We wait to see. I mean, I like to talk to hard numbers. The audited financials will start coming out by end of this month. Some of the banks will begin releasing their results. Then we'll be able to have a good evaluation of how the banks fared in 2021 when the auditors have signed off. But to the extent that by quarter 3, the impairment numbers were, even from management's own assessment of impairment, hardly would an auditor come and say, oh, you have been prudent, but we want you to be less prudent. You know, it happens sometimes, but you know, about 90% of the time, the auditor's view of the asset quality is at a more riskier perspective than from the management's assessment, which means if from management's own assessment, impairment rate or non-performing loan levels were around 16.4% by October of last year, it's a challenge. And to that extent, we'll just wait, monitor the situation, and see when the hard numbers come out. So we will be guided and see exactly how the industry fared during 2021.
Even restricting ourselves to the October numbers, some would say that where is the challenge? Because I believe that a lot of these banks, the escrow committees, have been still extra prudent in ensuring that these funds are going to sectors and firms that have the ability to pay back. The economy is turning around. So where is the challenge?
Yeah, there's a limit. You know, lending is basically cash flow driven.
Yeah.
You know, you lend against some projected cash flows, and where those cash flows are frustrated because of the environmental issues, of course, you have to take a second look at the cash flows, and sometimes, you know, restructure, extend the tenor, or maybe come down even on the lending rate, or whatever arrangement that you come to.
Did you guys do that?
Old banks did that, and you saw it. I mean, in 2020 alone, 2020 to 2021, banks reduced their lending rate by up to 350 basis points. So it was a very significant reduction from our view, you know, resulting in over 120-something million odd CDs that should have come as profit to the banks that banks let go to to the benefit of their customers.
And to
the extent that you project based on cash flows, and the hotels are still operating at half capacity, public events are still quite managed. You know, you cannot do like large-scale public events, even stadium and the like. You have to come with your evidence of your vaccination, and you cannot fill up, say, a Craft Sports Stadium for a football match. Schools that were expanding their facilities have had to put the constructions on hold. You know, so a religious sector, a lot of the work they were doing in terms of fiscal infrastructure have all had to either come to a standstill or slow construction process. So when this happens, it means that the time to realizing the benefit from all these activities is delayed. You know, and there's in finance, there's a limit or regulatory limit as to how often you can restructure a facility or how many times you can restructure. You can restructure today, tomorrow, another time, and the cash flow is still frustrated. The auditor or even your own risk team will tell you you need to take a provision on that asset. So that is why you've seen that spike. It's not per se, we have not done the hardcore analytical review yet, but I'm not sure that it is because of new loans that were granted, you know, in the last year or so. It's basically legacy facilities coming from those that were restructured, people who lost their jobs. There are people, even this morning I was listening to your network, and they were talking about people who lost 50% of their pay. And if your loan to the, what's the name, your DSR, debt service ratio, the bank used in assessing your loan was X amount, and all of a sudden 50% is gone, I mean, how are you going to pay the loan? So it's not just coming from the business, it's coming from individuals who also took facilities and either lost their jobs or had their earnings cut significantly.
Mr. Well, I'll be looking at how will all these things impact on fresh lending and also cost of credit general, even at the time when inflation rate is going up, and what are the banks doing about this? This is PM Express Business Edition, looking at rising interest rates, rising inflation rates, and how are these banks going to play a role to ensure that we see cost of credit go down and ensure that maybe we improve lending a little bit to those businesses out there. This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition, as we look at rising cost of credit and interest rates in the country, and what role can the banks play to ensure that at a time when it's obvious that inflation rates will be going up and is expected that the regulator might take an action to check that, how would that impact on your fresh loan or the loan that you're about to take or the one that you are already servicing? And that is why we are engaging the Chief Executive of the Ghana Association of Bankers, Mr. John Ewa. So thank you very much. And you were explaining to me about the default and all those issues. So in terms of restructuring some of these loans ending October, have you done any figure on that one as well that you have to restructure?
Yeah, I mean, on an ongoing basis, banks are undertaking portfolio review and having discussions with their counterparties on to what extent facilities can either be reorganized in one way or the other. Luckily, Bank of Ghana's measures, regulatory measures during COVID is still in place, and we thank the regulator for having that channel available to the banks. So to the extent that we have those measures still helping the industry to be able to do it within the law, I would say on select or case-by-case basis, banks are taking critical look at the portfolio and taking decisions when it's necessary.
So there's been some restructuring going on?
Oh, most definitely.
Is it really happening on the ground, or
it's
the banks are
we did an assessment. We did an assessment.
I
I think somewhere last year, and over about 5 to 6 billion of facilities had been restructured.
Wow.
Yeah.
I see. Interesting. Some would say that in all these things, how would that impact on credit extension for, again, very good businesses? Because that is where the challenge is. If you have NPLs rising, if you have default rate rising, if you have a situation where you have to restructure some of these things, the last thing any bank will want to do is to go into fresh credit extension.
Yeah, you see, it's not a lost cause. I mean, let's not paint a picture of like it's doom and gloom. I'm not sure that is the situation.
If you look at old numbers and BOG numbers, growth in loans hasn't been anything good to write home about.
And George, we are talking about growth. Go to other countries, they are talking about declines.
But they are different from our economy.
No.
Our economy is expanding.
I'm talking about African countries.
In the midst of COVID, if you look at even African countries,
we are talking about,
Ghana is one of the few
we are talking about other African countries
that has seen growth compared to others that are contracted.
Our research team is going through a process. We want to do some peer analysis of how the banking system in Ghana has fared vis-a-vis, our peers in the region and perhaps even beyond the sub-region. But clearly, banks have not been sitting on the fence. We've been having significant engagement, even with government, the finance ministry in particular, on what we can do to keep the wheels of the economy running. And we have not shied away from it. Of course, we'll do it in control, do it with eyes open, ears very wide open, and look at all the risk parameters, make sure that the T's are crossed and the I's are dotted, and that we don't book a loan today and take a provision tomorrow. But there are businesses that are doing very well as we speak. And how are they doing well? Banks are behind them. Banks are giving them the liquidity to do what they are doing. Even hotels that have opened, gradually banks have started their support to all the sectors. Aviation is now picking up gradually. And of course, if you see any sector that is seeing significant growth in their operations or their performance. You should see that the banks are behind it. When it's not going well, we are the receiving end. When it affects our customers, it affects us. Because if the customer is not able to pay, the burden comes to the bank. And therefore, to that extent, we have really stayed the course. And I think we should pat ourselves at the back. Yes, not to say that we have exceedingly achieved beyond all measures, but we are talking about very special times. We've not gone through a time such as this in our history in the banking system.
But Mr. Wells, some would say that on moral grounds, yes, some arguments can be made, but on prudent financial principles, I mean, if NPLs are high, if people are not paying back their loans, the fact remains that fresh credit extension this year would be effective. It's a fact.
No, of course. I mean, we are not operating in a perfect environment, in an environment that supports maybe significant reduction in lending rate because the risk to inflation is heightened. Inflation is now above 10%, I think 12% and over. The other variables are not really moving in the right direction. We have a lot of pressure on imported inflation because of all the challenges in the supply chain, global supply chain problems and crude oil price levels where they are at the moment. So there are a lot of the things that affect or impact our delivery in Ghana that are not originated in Ghana. They are mostly imported or they are like an outcome of something that has happened within a different environment. And you know, because of the pressures in the developed world, they are also using their monetary policies to arrest that inflation. But when that happens, there's flight of capital because the yield in the US is now going up and people will now look to places where they can have better yield, which is secured. You understand? So clearly the environment or the terrain is not a perfect one. But what I'm saying is we are not also folding our fingers and saying, yeah, it's not perfect because of that. Credit decision is that no more credit for the first 6 months. No bank, as far as I know, no bank has taken any decision in that area to close the tap to lending. But bankable projects are bankable projects, and bank will be interested in reviewing loans that make sense and projects that promises repayment, and business and people like you, like me, who may have need for personal loans, vehicle loans and the like. They are accessing loans. You can talk to your colleagues.
There's situation on the ground that personal auto loans are still being considered. They are all
going. You can talk to the auto companies. You see we are in January and I'm driving around. I see a lot of cars registered 22. I mean,
they financed from the banks?
Oh, they can talk to the banks and you see that banks are advertising auto loans. I've heard on TV, I've watched on TV, I've heard on radio, banks saying, go to the showroom, pick a car, come for the loan.
Of course, the adverts are there, but some will say that out of 100 or 50 good businesses that apply, some will say that you may just have about 10 or 5 successfully having their credit being approved.
No, you don't have the statistics to support.
I'm just making round figures.
No, you don't have the statistics.
It's a fact
No, it's not a fact. You don't
that how many of these requests have been successful.
But you see, it is not about the numbers. It is the number of bankable projects.
These are all good projects.
If banks are turning away good projects, then the point you are making, banks are not turning away good projects. The environment is not a perfect environment. The impairment risks are high. Inflation is where it is. Lending rate is at where it is, and of course, the higher the rate, the higher the possibility that the person may not be able to afford the loan. So all these things coming together, and if banks see good projects, they will have a positive.
So lending is still ongoing. Lending will not be affected as long as these projects are good.
We need the environmental factors to also move in the right direction. It's not a bank problem. You understand? We have an environmental issue, and we need all the economic variables to be moving in the right direction. When we saw it in 2016, 2017, 2018, when rates took a nosedive, you saw how lending rates also moved.
What do the banks want so that growth that people look at the MPC numbers or the Bank of Ghana numbers and are chastising these banks that the banks are not anti-growth. They just think about themselves. They are big cars, they are big branches, and nothing else. What do the banks want so that when those factors are there, nobody's going to tell a bank when they see a good project to start chasing them and chasing Mr. White, chasing Georgia, I feel that we want to lend to you?
I think first and foremost, a healthy country is a wealthy country. So all of us should put our hands to the wheel and get COVID behind us. So which means we need to observe all the things that the Ghana Health Service has been advising us to do so that we can get it behind us and the people can return to work full scale. We are operating below capacity as a country. Then that aside, we need inflation to trend in the right direction. And of course, you need market forces to also work in your favor. Crude is a problem in this country. If crude oil price goes up, no matter what you do to the inflation numbers, it will transmit directly to a lot of things, transportation, food, a whole lot of other factors. So we need those variables to work in our favor, and economic actors to also actively pursue strategies that reignite the business environment. I'm talking about things that the government payment of service providers. Once they get paid, banks get liquidity, banks get more liquidity, banks give more liquidity out. So we need a whole lot of things to work together for banks to also play a role effectively. I want us to leave here knowing that the issue at hand, which needs solving, is not a bank problem.
A lot of people don't believe you on that. They think that it's a bank problem.
No, it is not a bank problem. And we have COVID.
Convince me it's
we
not
have
a bank
COVID.
problem.
We have COVID with us. It's not a bank problem. We have inflation at where it is. It's not a bank problem. We have government borrowing where it is. It is not a bank problem. So there are a whole lot of other environmental factors or issues, economic variables that are trending northwards, which banks are not directly responsible for. We are an economic agent or industry, and our role is to propel the wheels of the economy, provide financial ammunition to the wheel, so that people who want money to do business will have access. That I've said time and time again that the industry has not closed the taps. I have not heard any bank talking about a freeze on loans or anything. You can talk to the bank staff, or you can talk to some of the MDs, and they'll tell you we are still having credit committees as we used to have in 2000 or 2020. So credit committees are going on. They are reviewing loans that pass the test. Of course, the risk factors may have enhanced. I'm talking about the things the banks will be looking at. The sector you are coming from is a key factor. If that sector is still struggling during the pandemic, and there's a fresh lending to that sector, the bank will really look at it critically. That's not to say they will not look at it at all, but they will have a critical look at it against their own risk assessment criteria. And if you pass the test.
So what do you tell those who say the rates in this country are very high?
You can look at rates and on standalone and talk about it being high. NPLs in this country is very high. Why?
Whose job is it to ensure that NPLs, when some of the banks are a little bit more prudent in their credit decisions, we may be able to cut about half of this NPLs?
I'm not sure about that. You see, the situation with non-performing, I don't want to go into the...
I know that the environment plays a factor.
The nitty-gritty of all the things that...
Some have raised questions about the decisions of some of these credit committees, and I'll cast back to one rice importer in this country.
If a government
would nearly collapse half of the banks in this country.
If a bank supports a contractor to contract a road, road is done. Interim payment certificate is issued. Ordinarily, it's cash. If a bank gave the money for the road to be constructed, once interim payment certificate is issued, you almost have your loan back. And banks are holding interim payment certificates that have aged. You understand? So if NPLs are high, it is not because the assessment of the credit was poor. But because other environmental factors have affected the payment cycle, for which reason, I mean, IFRS is IFRS. If you say there's an objective evidence that the asset is distressed, you have to take the impairment.
Yeah.
And if you are taking the impairment, does not mean the bank's assessment of the credit at origination was poor.
That's a factor. But I'll cite an example of one person who was into rice business. The banks were rushing to this businessman for credit and all that. And that decision or that action nearly collapsed the entire banking industry. Of course, those are one of several issues with credit, and even individuals pushing very hard to give out credit to persons they know they can't pay back.
It's also to do with information. The instance that you talk about, I mean, we don't want to narrow it down to personalities or businesses, but if there's fraudulent conduct, sometimes you need to also isolate the fraudulent conduct from the normal routine business practice. It is clear that there was more or less some fraudulent behavior in that scenario, and more so the fact that information flow in a part of the world is weak. The credit referencing system is still at its nascent stage. It's not at the levels where the risk profile of businesses and individuals can really be assessed from just looking at a credit reference report. And you need to be open your eye widely to be able to have a good assessment of what is a good asset or not so good asset. So the variables that move against banks in terms of credit sanctioning, there are many.
Yeah.
There are many. So the lending rate where it is, and I've said it before, banks don't take delight in higher lending rate, because banks, the higher the lending rate, the higher the demand on the rate to pay on your deposit.
But your numbers, your earnings, your profit
banks are
tells a different story.
No, but banks are. What is a return on equity in the industry? Our return on equity was, I think, just around 20. There is a sector in this country that is returning 42% return on equity. Nobody is talking about it. You're under 42% against banks' ROE of 18 to 20%, some banks significantly below. So if the cost of capital is around 20% and you are returning 18%, your shareholder is at disadvantage. The shareholder is better off buying government bond at 20%, 2-year government paper at maybe 19, 20%, and holding it instead of investing in your bank for you to return 18 or 17%.
The bank's already
so
doing
we
that.
need
they are heavy in T-bills.
Money is fungible. You understand? If it takes two to tango when it comes to loan, and if the demand is weak or is not at a high level, money must find space. And we have promised returns to the people who give us the money, and therefore wherever the demand is, banks are that's a reasonable business people, and they will have to make the most of the circumstance.
Mr. Well, just yesterday, the Federal Reserve signaled their intention that in March they will hike rates. Inflation has been going up all over the world. There was a recent IMF document that said that things will not be ending anytime soon. The fear is that already cost of credit and interest rates are high. Now, rising inflation would definitely cause the regulator to take actions. And the fear for a lot of people out there, Joe Plumber on the street, is that these external development might make it more difficult for me to get access to credit. What do you tell those people out there?
Inflation is a risk to lending rates, if I should put it that way, because the higher the inflation, the higher the push to hike lending rates. To that extent, it's a problem when you have an environment where there's heightened inflation. And I also have cause to believe that the reduction that in the policy rate by Bank of Ghana sometime last year, towards the end of last year, perhaps is now finding its way to flow through to transmit through the financial system, and therefore the benefit we may start having the benefit from now to maybe the coming month or so. So we may be going ahead of ourselves if we keep on hyping rate or increasing the rate. I'm sure Bank of Ghana, in their consideration, may have that at the back of their minds. And the rate of transmission should also be assessed, whether we get proper correlated relationship, and therefore we don't create one problem in trying to fix another.
And so we think that there should be a little bit of wait and see in terms of policy rates hike?
I should think so. I mean, discussions are ongoing. I'm not a member of MPC, so...
No, I mean, speaking to you as a banker, Mr. Wa, speaking as a banker, not people, as an MPC, speaking as a banker, being in this industry for quite a long time.
The technical people are having the discussions. Yes, I'm sure by Monday...
Would you wish that rate is not high so that we need a little bit more time to do the assessment so that the negative effects that comes with the rate hike?
I'm sure Bank of Ghana will have a very serious review of the environment in terms of the risk to inflation and to what extent policy rate will be used to arrest, to try to arrest the inflationary pressures. To the extent that the previous hike in the policy rate, really, we have not seen a lot in the terms of response at the moment. And we foresee that the transmission is still ongoing, and therefore we may begin seeing the benefit towards the end of January to February. Wait and see for this quarter, perhaps will be more of an appropriate response from my personal perspective.
So raise maintenance might be a best option for now?
I think for now, yeah.
Mr. Wa is actually a former industry person, a banker, of course, and practiced a lot in this industry. And this is PM Express's business edition as we look at rising interest rates because of the inflation pressures. And what are the commercial banks doing to ensure that in the midst of all these challenges, you can get access to that loan that you've been looking for? And if you are even servicing one, the rates might not be increased. This is PM Express Business Edition. Welcome back to PM Express Business Edition, an environment where interest rates are expected to rise because of inflation pressures. What are the commercial banks doing to ensure that in the midst of all these challenges, you and I can get access to credit and credit is not impacted badly by this? Mr. JoyNews is the Chief Executive of the Ghana Association of Bankers, and we're talking about what they are doing, what they're about to do, and some assurances from him that despite all these industry problems or environmental issues, you can get access to that credit that you've been badly looking for. You say, well, we're in an environment where we are all excited about cashless transactions and all the rest. And I knew that the association came out with their position on it. E-levy is, one would say, the biggest elephant in the room. Have the banks been engaged, and are you now okay, or there are still some concerns that you're waiting for it to be addressed?
There are significant concerns. Do I subscribe to any attempt to rope in the informal sector into our tax bracket? Yes. The mason must be made to pay taxes. The carpenter should be paying taxes. And if they are found in the informal sector and Momo is the way we can get them, I agree that we should find a way of getting their due to the national development. The issue is, at what rate do you want to bring this into action? And we've made this point from day one, that one of the critical success factors for any policy initiative is the entry framework. How you enter in your policy delivery is very important, and the price is a critical component of the whatever framework that we are using to enter into a new tax handle. So we think, as an association, we think the 1.75
is too high.
It's high. We believe that anything around 1% or below will be a good entry point. I mean, the budget belongs to the economy.
Yeah.
We are going to have even a mid-year
budget.
Review. If by that time we see that the response has not been as negative as people have been forecasting, we can take a decision and say, okay, now it's 1.25 or whatever it is. so that we can do a little bit of a wait and see. The other issue we have, and which the minister, by the way, has promised and has told us that is not going to be in scope, at least to start with, is the person-to-person transfer, though it remains.
Help me break it down. What do you mean by the person-to-person transfer?
Person-to-person transfer is John Awuah transfer money from, say, EcoBank to George Wiafe in EcoBank or in Standard Chartered or in any other bank, Access, Zenith, UBA, UMB, if from an individual to another individual. The draft bill that went to Parliament said that level of transfer will be in scope. We've engaged the minister and his team just this past Monday, and we had full assurance that to start with, the points we have raised, kind of makes a lot of valid points to them. And to that extent, the person-to-person transfers in the banking system will not be in scope, but that the minister will maintain an administrative right within the draft bill that is going to be passed or, discussed in Parliament, considered by Parliament. They'll keep an administrative right to scope in person-to-person transfer if they observe a significant shift in platform. That because of a levy in the Momo environment, people are now moving away from transferring money through Momo into the banking system. If they observe that significant platform shift, then they will rope in person-to-person transfers from the banking perspective. As an industry that is about the most tax compliant industry in the country, we believe that people should pay their due. We also believe that our customers should pay their due taxes. But again, we also believe that our customers must pay taxes fairly and equitably. And to that extent, we agree with the minister and his team that, yes, we'll go with what the original plan was, that is a Momo tax, bank to wallet, wallet to bank, Momo to Momo tax, and we will take away the bank transfer involving person to person for now. If there is any observed shift in people changing the way they do their transfers, they are now going to maybe the banks instead of doing routine transactions on their Momo. And the minister says he will maintain an administrative right to reintroduce it at any time, which we support. That if that becomes the case, then it should be reintroduced, because the policy objective was or remains to rope in a lot more people in the informal sector. And if we all believe that the individuals who are banking are already within the formal sector, there are people paying the taxes, there are people paying income taxes. If because you are taxing people in the informal tax environment, there is a fear that and because of that, we will then tax these people to level the floor. You are overtaxing the people in the formal sector. Because already the people with bank accounts are the people paying PAYE, doing transactions online. That gives visibility to the GRA. And I think it is very important because of all the things as a country we are doing. We have Ghana Card, we have these tax IDs that we have really integrated significantly, and we are now doing integration with SNIT. Ghana Card is doing integration with SNIT. We are doing with the tax ID and the bank accounts. The more funds we are able to move to these formal channels, the clearer the visibility of GRA and the better the tax mobilization drive of GRA.
In terms of the concern with the entry point, the rate, has the association tabled this documented to government?
We have not sent a formal communication, but we've had roundtable discussions. We've discussed. The minister has been, I must say, has been very open. Against all odds, Monday at 7 p.m., we were able to have a conference call with him. And he had a very busy day all day, but still managed to speak to us. And on this course, their formal course is more or less as good as writing. And it's on this course that the minister made confirmation.
Some would say that we're getting there in terms of cashless transactions. And I look at Momo platforms and I look at a lot more persons, the checks and all the rest. Is the association afraid that this rate bit, as in the entry rate, if it's not managed well, it could impact the drive in using all these cashless platforms?
The only aside thing I would say is, the Momo environment has an implicit threshold.
Yeah.
So there is a maximum amount that you can do on a mobile money transaction, and I kind of agree to the view that the ministry has expressed, that the convenience that that platform provides definitely far outweighs the inconvenience of paying a certain levy.
And is that something that the banks subscribe to? All the banks subscribe to?
You see, the danger with comparing the Momo to the banking system is we don't have thresholds.
Yeah.
And therefore, a charge is a charge. And if you make a 500,000 Ghana cedi transfer, you are going to pay about 8,500 levy. The bank charge is about 30 Ghana. And then there will be a levy of about 8,500. So you can see, but if you pick the Momo side, you can transfer maybe a maximum of 10,000 Ghana cedis or 5,000 Ghana cedis or 500 Ghana cedis. And then the charge is a certain percentage of that threshold amount. So to the extent that you cannot undertake massive volume of transactions per transaction on Momo, the charge per transaction may be moderated, and for which reason the inconvenience of maybe taking a taxi to the bank to do it, the benefits.
They are still talking about even
outlay
ATM withdrawals. Has that been excused from that as well?
As far as I know, ATM withdrawal is not in scope. Yeah,
it's not in scope as well. So for you, you're hoping that with the time left for some of these engagement, some fruitful, consideration can be made to address the concerns.
Right after this interview, I'm on my way to Koforidua to join the stakeholder, the discussions. Things may come up that may need us captured. May need us to also respond or to say something. So, we are monitoring closely the discussions. I think it's a good discussion. It's been open. It's unfortunate that initially it went to Parliament before these stakeholder engagements, were undertaken. But better late than never. And I hope that the input that independent-minded people are making would also receive some attention.
So, let's come to another development in the industry that some would say is interesting: the use of the Ghana card from July this year. I mean, we are still in the process of getting more persons outside the banking space into this area. We still know the number of persons that have already signed up. The Bank of Ghana says they are optimistic that by July, even if the number doesn't look good, they might look at a situation where of extending that period. What is the association's view on this?
We believe that is a positive development. The Ghana card promises extra layer of security.
That you don't have already in the system?
Yeah, the identity
You've
theft.
done a lot of checks in the
system. We still have problems with IDs that are so easy to clone. Not all the IDs are biometric, which means that I can put your picture on my name and go and do something.
Voters ID, you have a system where you can verify, right?
Yeah, we have a system that we can verify.
So
but
where's
the things you are verifying from the voters ID are not as strong as the metrics that are available in the Ghana card environment. And again, they are going to integrate the voter ID card in the Ghana card. The passport is going to be integrated, or is integrated already. Driver's license is on there. Your SNIT card is on there. So it is a one-stop shop as far as we are concerned. And again, it's biometric, has facial recognition functionality, which all enhances the security profile of the transactions that we undertake. Identity theft is a big concern in the industry. Fraud, as we talked about, most of which are people who have managed to either clone somebody's ID or have been able to divert somebody's call. So there are things that once we have come up with this innovative card, we need to use it to facilitate transaction processing securely. And to that extent, we have been working with NIA and their partners since last year. I'm talking about the industry, banking industry. So integration has already been, discussions and commencement of integration has already started.
The banks are not prepared to pay to get that access, which used to be a little bit of disagreement, some would say.
we've managed to have a wrap around the charges. Of course, it was negotiated. As it is now, that is how it's going to be, and the charge is not going to be any different from the charge we are paying for use of G5. If you are not getting it passed on to you now, I'm not sure you are going to get it passed on to you when Ghana Card comes.
And the one clarity bit about, so the bit that the regulator said that I also have to update my systems with my, what does it mean? Does it mean that I have to come back to you and then change the ID?
Yeah.
What lag period is the bank themselves giving to existing customers to also?
So the plan is, since the bank's integration, we believe that by March or April this year, the industry would have been ready, and between April and May, June, they will use it for customer records update, KYC documentation update, and all those other records that the banks hold, which reflect the previous IDs. Because you need to talk to your bank, and then your driver's license ID is replaced with your Ghana Card ID, and from then on, you are good to go.
Mr. Whilst we wrap up on this, I went through the payment strategy paper of the Bank of Ghana. One thing that was captured in it was bank switching accounts. I mean, me moving from bank A to B and still holding my account. This is just a proposal in a strategy paper. What do these banks make of it?
We want to study it. Discussions have just started. I only got to know about it, I think it was last week, and therefore we are studying it. I can't make any.
The idea was to bring about competition in the industry.
I'm not sure.
Are you ready for that competition?
I'm not sure that would change how competition is undertaken presently, because what we need to do is to have a way of making account opening easy for customers. And once your Ghana Card is linked to your bank account, with your Ghana Card, somebody can see somewhere and extract all the accounts you hold in the banking system. So I don't know about porting of bank accounts. I'm not sure how successful porting has been within the telco environment. And to that extent, I said, this thing is just fresh. We don't want to say it is okay or it is not okay. It's a regulator's document, and we will study it. And if we have any comments, we have avenues where we are able to channel our comments or our notes to the regulator if there are things that we believe we need some further engagement on.
Just like the telecom industry, some said that this hasn't brought about much porting, and maybe we should draw lessons from that.
Yeah, but that telephone numbers and bank accounts are very different animals.
Opposing origins.
Very different animals. So let's study it. I don't know where this has been done before.
I told in UK there's some in London.
Yeah, okay. I'm not sure. So, and that is why we need to study and understand how it is done elsewhere, and if that helps to improve competitiveness, we are all for it in terms of making the customer keen, treating the customer fairly. People should be able to shop just like they go to the market and they shop. But of course, we need to review the document and understand exactly what the risk factors are, how your account can all of a sudden appear. We have core banking applications that are very different. The structure of the accounts may be very different. So there are a lot more of technological discussions that we need to go on and also to assess the risk factors. But as I said, these are early days. I don't know whether it is an exposure draft that has been issued. We'll have a look, and if there are any comments, the industry will assess, and then we have channels that we always have discussions with the regulator.
The Ghana Card, you're quite optimistic about the security benefits even to the banker and the bank and even the clients as well. But Mr. Well, aren't you worried that at a time that we are still struggling to bring a lot more persons into the banking space, this challenge could cut a lot of people out?
Oh no, I mean, the announcement has come quite early in the day. We are in January, let's say end of January. We are talking about between January and end of June for people to have Ghana Card. Yes, I've seen some images of people queuing in the offices of NIA. So we call on NIA to be up and doing. Right. We cannot force people to get this and then make it difficult for them to get. So we call on them to do the right thing, open up, if it means even having another mass registration, because of what we are seeking to do, they need to change whatever approach they are using now does not seem to be working. And they need to change to make it accessible so that by April, May, anybody who really wants to have a Ghana card, perhaps works there within a matter of 5 minutes, can run away or walk away with their card, and then they can have their banking services on their fingertips.
Having your banking services on your fingertips. Mr. White, thank you so much for your time. I appreciate your time. And this has been PM Express Business Edition, as we looked at the rising interest rates and how inflation pressures might change the dynamics for you if you're servicing a loan or even you intend to take one. And the debate will still go on in your homes and offices about the level of rates in this country and whether a lot more can be done to drive them down. My name is George Yafe. This has been PM Express Business Edition.